Hello, today we are solving JAN 2022 paper question number 2 part C. Calculate the total inventory value of 30th September 2021 for the Fortnam Production. They have given the inventory information like this. The business uses the first in first out method for valuing inventory on a periodic basis. The following information is available for the year ended 30th September 2021. So they have three types of products. So they have opening inventory, then they have made some purchases, then there are issues during the year, so and there is net realizable value. So we are supposed to calculate the total value of the closing inventory at 30th September 2021. So let's calculate this. So it is issued using FIFO, which means the closing inventory is going to be made up of the recent purchase rate. Okay. So now first one is the standard. So for the standard, so you will have at the beginning there are 200 units, okay, and then 700 units have been purchased. So in the periodic inventory you will update at the end of all the purchases and issues, okay. Whereas in perpetual inventory you are going to update after each issue or purchase happening, okay. The inventory you are going to update, closing value of inventory is going to change after a purchase or issue. Here it is going to change only at the end. The closing inventory value will change only at the end of the all the purchases and issues. So 200 was at the beginning, then they did some purchases, 700 plus 300 units were purchased, and then issues of 950 units happened. So which means that there is 250 units that was remaining, and these 250 units are going to be valued at the most recent purchase, that is 11, okay. It can be issued out of this, so it is at 11. So 250 at 11 pounds, okay. Recent inventory you have to identify. Then for the deluxe, okay, you will calculate it like this. So 250 at 11, let's write this is the closing value of the inventory. So 250 at 11 is the remaining inventory, and then we have deluxe. So deluxe first one, okay, at the beginning the opening inventory was 100 units, then plus 400 units were purchased, and then 100 units were purchased, and finally the issues of 400 units happened. So which means that is equal to 200 units, okay. 200 units have to be was remaining, but these 200 units we can see 100 would have been there at 13 pounds, okay, closing inventory, and the remaining 100 would have been at 12 pounds, okay, from the previous one. So 12 pounds. Now let's write these two are the closing inventory values. Then for the super, okay, we have to also check whether it is equal to or it should be less than NRV. Whichever cost is less we have to include. If the NRV is greater, if NRV was small, okay, was lesser than this cost, purchaser's cost, then you will include the NRV cost. For the third one we are going to see that. So for the super, okay, at the beginning there were 50 units, and then they purchased 200 units, and then minus 150 units was issued, which means the remaining was around 100, okay. 250 minus 150, that is 100 units was remaining. So the rate at which this 100 units would have remained, okay, it should have been at 20, right. So it should have been at 20, but we can see that the net realizable value, okay, is 15. So your remaining value you will value at only 15, so not at 20. So 100 at 20 should have been the remaining, but we can see that the net realizable value was only around 15. So you will calculate the remaining inventory at 15 pounds, okay. So it is 20. Okay, 15 pounds, it is less than the 20 pounds, so you will value at the NRV rate. Now let's calculate this. 250 into 11, that is equal to 2750, 2750. And then you have 1300 plus 1200, which is equal to 2500, and this one 1500. Okay, 100 into 15, that is 1500. Now let's add up all this total value. It is going to be equal to 6750 pounds. Okay, so we can see that this is the value of the closing inventory as on. Okay, this is the value of the closing inventory that's going to remain. Okay, that's going to remain with the business after the